Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about identifying the best pairs to trade, narrowing down your watch list, and again, just refining the process each day, 1% better each day. It's the process that will help you identify the best trade setups and filtering out the ones that don't set up or come to complete an entry pattern. But it's critical. Pair selection is probably paramount in terms of identifying your best opportunity in the session that you are trading. So we've started a new week, a new template. Monday starts our new week. We won't complicate things too much by confusing people with the day count, but we'll go back and review the process from last week. We had the high of the week on our Friday heading into our holiday Monday. Our holiday Monday, that was our President's Day. We had Monday, pink line dividing our Friday Monday. And as we talk about in the playbook, that is our opening range. When Tuesday starts trading, though, we have a higher high on the inside. We clear out the lower level high. And then Friday's low, that was our breakout on Monday, the holiday Monday, becomes a failed breakout at the close of day 2, Tuesday. So we have our Monday opening range. Tuesday forms our initial balance, and we have a breakout that has now potentially failed. Higher high on the inside is the formula for the dump and pump potential setup. We have day 1, day 2, day 3. We have first green day on Tuesday. First green day is a day that closes above the open, and that is a buy low of the day, low of the session opportunity if it presents. And you'll notice they auction back into the breakout, make a higher high on the inside is the formula for the dump and pump into our New York Open for a vertical continuation in the long trade direction. Day 1, day 2, first green day, day 3, long trade back towards the high of the previous week. On our Thursday, we had a 3-session opportunity. U.S. session puts a low in place. Asia is inside, and London comes down into the low of the U.S. session that was formed, the higher low, before continuing our long trade. We thought potentially. Now, coming back to our initial balance, we have, if we look at the initial balance, there are 2 ways to view this now. Once we have our initial balance, because we had an extended day count, we can now look at our new day count as breakout trades. Day 1, day 2 on Thursday, and day 3 on Friday. So let me go over that again. Once we have our opening range, we have breakout traders triggered on our Tuesday, but our initial balance forms our day count, our opening range, and initial balance for the new week. We have a failed high of the week, day 1 on the Friday, that breakout fails on Monday's low and starts the reversal process. We have our initial balance. We had an extended day count. What that means is we have day 1 on Tuesday of breakout traders in the long direction after our holiday Monday, day 2 on Wednesday, day 3 on Thursday, but that did not reverse. Now, a lot of traders messaged me and said, oh, that's a reset and everything else. Potentially, maybe, but we have a day 3 count starting on our Friday. We have day 3 breakout traders in the market at the high of the week on a reversal that failed. And that's what brings us to today, a new week, a new template, and we have a market that has broken out of the high of the week. But most importantly, it has a break in structure. This is a 15-minute chart. We have a market that has triggered breakout traders after 3 days of longs from our opening range initial balance breakout. We have a peak formation that is made in the London session that breaks lower and auctions down beneath the breakout on our Monday of a new weekly template at the high of the week. So again, let's go back and review this. We have our opening range holiday, a reversal on the inside, higher highs, higher lows. Breakout traders are in the market, but they aren't really, because if you understand that Friday's high has not been broken, this is now locking in the failed breakout. This is our initial balance. That's the first 2 trading days of the week. So if we go back to the playbook and understand the importance of those levels, is that one of those extremes will tend to hold. And because we have an extended day count that did not reverse on our day 3 breakouts, if we used Tuesday, Wednesday, Thursday, it is not necessarily a reset, but from our initial balance coming back to our Friday high, we can start our day count at the initial balance. Day 1, day 2, day 3. They trigger day 4 breakouts. We get a break in structure, pump and dump for 50 pips back into the breakout traders from Thursday's high. Remember, nobody gets a free lunch. This ramped up close at the extreme is a dead giveaway of a potential opportunity at the beginning of a new week. Remember the importance of timing. Several traders will look for trades just because it breaks a level and expect the same situation. But remember the importance of timing. We have a new week, a new template. And we are now also at the end of the month. We're a couple of days from the end of February. So as I mentioned to one trader, when I look at the opportunity, the potential setup, my next step is then to go to my numbered boxes. So we have our failed breakout. We have the lower high and lower low, which is our formula for the pump and dump. The universal entry on our 5-minute entry criteria is met right at the half an hour mark into the beginning of the U.S. session, first hour of the U.S. session, for a no stress, easy 50 pip blow off move, which now potentially is giving us our first red day at the beginning of the week. Now, remember, understand, first red day is merely a potential trigger day, a signal day. First thing we do is we redraw our consolidation heading into the close. No idea what this market could do. They could trade down into the low. Remember, we have breakout traders trapped. Potential target may be the previous low of day, where we know that there are other time frame traders stops in the market, but our consolidation is what will help us identify a first red day trade opportunity if and when it presents. We could get a lower high, we could get a trade back up into the high in London or in the US. It could be a 3-session setup. I have no idea. We have major red news on the calendar in the US session Tuesday, but for now, the first most important thing to understand is that when we have that day 3, new week starting, the high close, a trending day that closes at the extreme, at the end of a week, they break structure on the inside, the lower low, lower high. 5-minute entry criteria, major round numbers for an easy 50 pip blow off, and now we have our first red day. Coming back now and comparing the basket of these instruments, my US dollar crosses, I talk about this, I look at the Swiss, the yen, and the Canadian as one basket, and I look for the best opportunity out of those 3. So to me, the first and clearest obvious one was the Swiss franc because it had broken out and failed. But I did have a great question from a trader. Was the short trade in the London session or Europe-London window a 90-10 setup? Well, remember, the most important thing to understand is whether or not, number one, you have a setup. Now, we have a great opportunity. We have a market that broke out on Friday. The Friday breakout trade, again, nobody gets a free lunch. This was a fantastic opportunity with our M structure. We'll just zoom in on this, and then we'll go to our number chart. Again, the trade completed in the U.S. window, but for traders in that London session, Europe-London session, that was an easy 25 pips. We had a peak formation made. We have our high structure locked in. This is an inside day though. So again, picking between the two, my choice for a 90-10 opportunity would definitely have been the failed breakout at the high of the week. Monday, new week, new template, week 3, and we have day 3 longs already into the market with a high closing day. So again, comparing the basket of instruments and identifying which pair may have given you the best opportunity. And for me, clearly that was a Swiss franc out of the 3 U.S. session, looking at them as a pair. Now we'll look at the pound and the euro. Again, a super opportunity for traders. We had a pump and dump reversal after last week's British pound news. They pumped it up in the London session inside day on our Wednesday. Thursday broke down and got day one shorts in the market. So again, coming back to the inside bar, the pump up, that reversal starts and we get day one shorts in the market on our Wednesday. On our Thursday, day one shorts. And then on our Friday, we have day two shorts in the market. So again, the first day that breakout traders are in the market after a failed breakout or reversal from a higher low of the week, day two. And today then was day three potential shorts getting triggered into the market. Now that did not eventuate. We have a little false break right at the timing window and an engulfment right at the Europe Open. But we also have our lower consolidation down low. Notice where all the volume is trapped. The low of the day, the low of the week into the U.S. session. We get our little false break reversal, an easy 25 pips right off the bat for Europe Open traders. The higher high on the inside. Remember, we have breakout traders triggered into the market. The first potential target is the breakout level, but the higher high on the inside is the formula for the dump and pump. London dumps for the third hour pump up, and our next target, of course, if low of day traders are trapped in the market, breakout traders are trapped in the market, is the previous day's high. Now, we could have traders call this a reset because that is the pump, 3-day reversal, pump, inside day, and then the reversal. That reversal starts our day one shorts, day two shorts, day three false break. Some traders may call this a reset. So that will be our potential next target, day one, day two, day three, into the new week. And again, notice where the volume is trapped down low for a reversal trade opportunity. We have day one longs now in the market, triggering Friday's high. So again, we'll bring this over. Day one longs in the market. This was a fantastic opportunity for Europe London traders and a continuation trade for the patient trader in the New York US session, which came later on. The first vertical move came on durable goods news release. That was a squeeze for the vertical trend trade. You could only go long here on the smaller time frame. Again, long traders already in the market. We have a low of the day, low of the session put in London. Market made higher highs for the dump and pump into the New York Open. The durable goods 8:30 a.m. New York report for the continuation trade back to the high of the day. Euro, same thing, very similar pattern. We have our holiday Monday after a pump up day on Friday. So again, the low of the week, pump, 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 day one, day two, day three, initial balance. And we had an extended day count. So again, coming back to our initial balance, when we get the extended day count, I'll use that for my day one shorts, day two shorts, and Friday, of course, becomes our day three shorts, which closes as a trend day. So again, understanding this U.S. session, the entire U.S. session was trapped down low. And when I see that, that's a dead giveaway. They're going to go vertical because all of this volume is trapped. Day three shorts in the market. The first thing they do is they go down and they tap the low. They don't break out, though, because they already have all this volume trapped, but they trigger breakouts before reversing and immediately go back to the high of that lower consolidation from the New York session. Again, higher high on the inside, the formula for the dump and pump on the 8:30 a.m. durable goods back to the high of the day. So I'm going to just keep repeating the same simple stuff over and over again. Low of week, high of day, high of week, low of day. That's how we're looking at things. Creeping trends will resolve themselves in one of two ways. Bill McLaren, one of my great mentors, taught me this. The more you realize this, they'll either capitulate and blow off in the direction of the trend, or it's a reversal in a short squeeze or a long squeeze for an explosive reversal trade. But creeping trends resolve themselves in one of two ways. This is the blow off in the direction of the creep. Back to, again, we talked about this briefly. We had a market that went up from double zeros 150 pips before triggering breakouts. I talked about this. When we go a little bit further, we redraw our highs and lows. They break out one more time and fail. Creeping trend, 150 pip box for the reversal. My take profit target was into this lower level breakout. I just had a vertical line drawn across the opening price of that breakout candle as a potential area, and this market hit that without any problems before reversing. And again, I'm not looking for the reversal. I know they're bulls looking for that. No problem. Several traders hit the reversal on Friday night, but just coming back to the simple setup, similar, the exact same trade on Friday. They broke out of the previous day's high. We redraw our levels. Lower low. They broke the low on the inside. Lower low. Pumped it up. Made a lower high again. Lower low. Into the peak formation high bull candle. This is a 15-minute chart right at the beginning of the U.S. window for the short trade, just into the beginning of the news, major red news. They pumped it up one more time on the 5-minute chart and gave the textbook perfect 5-minute universal entry as per our criteria in the playbook. Major round numbers, crude, West Texas, doesn't matter which one you trade. They both move pretty much identical for, again, an easy 75 to 100 pip short trade. Okay, gold, again, similar. We can go back to our opening range initial balance. We had an extended day count, so we can restart that off of our initial balance. On Wednesday, we had day one shorts. And Thursday was our day two. We'll just pencil these in. Day one shorts. Day two shorts. And on Friday, we have our day three shorts out of our opening range initial balance. We redrew because we had an extended day count. So this market, again, as per with the other ones, we had extended markets and we have volume trapped down low. We can redraw our consolidation high lows. They trigger breakouts before making a higher high on the inside. Doesn't take out the high of the day. But this becomes a very, very well-defined short squeeze setup into the open of the U.S. session. So we have a peak formation at the breakout level. They jam them in before going into consolidation. One push, two push. We'll zoom in here. Peak formation low, one push, two push, and a 1, 2, 3 little inside bar. Durable goods, 830. Okay, we have our 5-minute universal entry criteria met. And remember, this is an explosive, this is a news catalyst trade. So if there's momentum, we have the 15-minute setup. It's a short squeeze. This should explode. So I have no qualms if I was to have taken this trade. I traded oil. But if I had taken this trade, understand my max stop 15 to 20 pips, because this is a squeeze. It should go vertical. And people are looking to counter trend this. So coming back to just having the obvious in mind, short trades from the London session that collapsed down. This is a potential area then where the market broke the low of the London session as an area where this market will go. And look again, lo and behold, major round numbers. So do not try to counter trend this. We have the high of the U.S. session as a target. Minimum 3 sessions. U.S. high low. Asia tries to break out and extend the range. That locks in the low of the day, low of the week. We have now our session high, session low. There's our big box. We have 3 levels of drop from top to bottom. This market's gone almost 150 pips from the original trade short in London, or the London gap on Friday. We're down low, higher high, higher low, dump and pump short squeeze for a vertical explosive move. So some traders hung around and waited for the end of the 3-hour window for an easy 25 to 50, depending on where they got filled at. Again, just required more patience. The market traded up for traders who are looking for that entry. Again, coming back to understanding the level. They've gone up to the double zeros. They've engulfed the high bull. I would be getting filled anywhere above 75, but ideally as close to the peak formation bull candle as possible. So underneath of that fill potentially when we start our new hour, third hour, 1 hour, 2 hours, 3 hours up, and we also have one push, two pushes, and a third push to the high, and an engulfment of the high bull candle. So again, this allows us to lock in as tight an area as possible with a minimum of back to where that last level pump candle begins. So these are things that visually you should start to be identifying. I'll just mark this candle off. When we get into a third level, okay, we've had 3 levels of rise. We're into our third hour. This is the last level where the pump candle goes vertical. Third push, that's the pump candle. That's the minimum area where this is potentially going to go. But I'm never surprised when they go back at least to reach down into the original guy that went long after the news. So congratulations to both bulls and bears. They were fantastic opportunities. Now I want to talk about the indexes just briefly. So this is an example. Again, we have a market that reversed, failed the breakout. So the next target area is the high of the day. So a lot of traders were asking about, NASDAQ, ES, different ones. And here's the thing. I'm just looking at the criteria of high and low of the day. There are going to be other times when we have peak formations made inside and they trade back up to or down to a peak formation high or low from a previous session that defines an inside box, similar to what we see on Friday. We have a peak formation that trades into our high bull. That's a consolidation that failed and a reversal inside. But today, this breakout's failed. So our thesis could be day 2, but where are you going to get in? Some traders were looking to short just at the beginning of the session. But here's the thing. Compare all the indexes. So we have S&P, then we have our NASDAQ. So NASDAQ didn't quite get there. So again, if I was filtering out 1 or 2 of the best trades, if somebody's long, that's different. But if you're looking for the reversal, again, there we go. We have the same opportunity on Dow Jones 30, same timing, third hour. Everything is timed and measured. NASDAQ didn't quite get there. S&P got there and gave traders an awesome opportunity for the reversal trade. So again, traders have asked about the numbers and everything else. When I go to the trade opportunity itself, so there might have been traders long in the beginning of this session, the continuation trend trade back up to the high of the day. Once we have this engulfment and pin hammer reversal right here, the pin hammer reversal after the engulfment, okay, this isn't going to meet the universal criteria because remember, we're in an extended market. We've had 3 levels of rise. This is on a 5-minute chart. So even this 5-minute chart gave at least 150 pips, maybe 200 short, depending on where traders took their profits. But we've just broken the 100 pip box. We've broken the previous day's high. We've locked in the high of the day, the high of the session, for the reversal trade opportunity. This is the safe trade right here. This is the safe trade. No major red news driving this as a catalyst. Durable goods wasn't even as listed as major red news on my calendar, but respecting that at 8:30, this market is now into the third hour of trade. So obviously NASDAQ gave a high of the day short trade, but the easy opportunity is recognized by the violation of breaking or false breaking the previous day's high. Same with the DJ30. So we have, again, traders who may not have been able to, or who were not long. They were looking for the reversal. This is the 1 minute. We'll go to the 5-minute here. Very similar. We break the previous day's high. Again, remember, timing. We've gone 3 levels of rise. It's the third hour. And we get our little reversal engulfment of the small bull, the second small bull, right here. And we have our opportunity now to enter the market with a tight stop. And I keep repeating the fact that once you understand this, whether you're long or short, when you get in, when you put an entry in place and a stop and a take profit target, you can believe whatever you want, but it all has the same. It's all the same, except it's whether or not you have a 90-10 opportunity in terms of your trade setup. So you're taking an entry with a stop and a profit target. So all the other stuff you believe that you're looking for all these confluences and lining time frames and indicators and these other fins and these gaps and all these other things, when in reality it's the same thing every day. It's a pump and a dump or a dump and a pump, the same things over and over again. But what makes one trade potentially more lucrative or opportunistic may come back to the day count, the type of setup, whether or not it breaks a level, whether or not it breaks out and fails, or whether you're inside and it's just a scalper and you're trading, London, and it could be a 3-session setup and you need to wait for the bigger move in the US or whatever that may be. So again, just filtering out pairs, both DJ and S&P went right to the previous day's high in a vertical move. So for traders who found it hard to get into the long trade and they were hanging around for that third hour, again, everything is timed and measured. And you'll notice that as much as the long trade went up, the short trade came all the way back down, plus a bit more. So hopefully that makes sense, traders. Stick to the outsides. Master the day count. And if there is a day count extended, remember, we should have a break in structure. Last week I got in on a starter after a break of the high of the week. That trade did not complete, but it gave me 20 minutes to move to break even. That first starter was where I was looking for the break in structure to occur. It didn't happen. So I close it down, I get out of the market, and I look for a better setup. Master the day count, master the opening range and initial balance. Manage your risk, set a profit target, leave a trailer and whatever it is that you're going to do. Lock in the money, get off the screen, come back, rinse and repeat, and do it again the next day. We're going to have some great opportunities this week. We've already had fantastic movement today. Starting off the week, I wasn't expecting as much movement as we got, and we've had a tremendous start to the week. So congratulations to the traders that nailed these. I got a lot of emails from traders, and the comments were traders not only nailed session trades in London, some in Asia, obviously indexes, oil, gold. There were trades in both directions. Fantastic, super exciting. Make sure you keep it in your account. Keep it going, keep it growing. It's going to be a big week, and may the markets go with you.